Tuesday's market closes lower except for the wheat market. Kevin Duling with KD Investors joining us. Soybeans did pull back on Tuesday, Kevin, and we have rain in the forecast, but is the market trading that? Is it concerned about this crop?
The market doesn't feel like it's concerned at all. And a lot of these forecasts have ended up being, they've really backed off on amounts of rain that have fell. And so you see the pressure today. I mean, it's a combination of it's Christmas time, so not a lot of volume. And then on top of that, the computers are looking at the forecast saying more rain, more rain. You've got a percentage of that crop that's just finished planting. And so some of that crop still has a chance to make it if this weather pattern does shift. And so you've got a lot of that going in there. It's odd. You see a lot of pictures, a lot of problems, and it's one of the worst droughts on record. And at what time does that come into play?
So if we do get some pretty good rains in South America, we've held 13 so far, but that'll be pretty vulnerable, won't it?
Well, I don't know. I would think it'd hold, but it may not. But the thing I look for, are we seeing demand? Are we seeing good exports? And the answer is yes. And as long as that continues, there's really no reason for it to dump down into the 12s. You got Argentina. I mean, they're going to have a good increase. They're going to get back to normal. But when you look at the global stocks use with demand the U.S. has had, plus, the drop in Brazil, it's hard to get bearish to stuff. I mean, it doesn't need to go down to $12. I would think it shouldn't.
So corn down the last 2 days. Did corn just follow soybeans on Tuesday, or was there some concern about the Mexican rail issue?
I think that kind of set the tone for the week, that you got the problems there. And in the back of everybody's mind, you've got the Panama Canal shut down to grains. You got the Suez Canal shut down to everything. And you've got the Mississippi low. And it's like, man, all of our normal shipping routes are having problems. So I think that compounds the problem a little bit from reality. I think hopefully this Mexican one gets cured pretty quickly, but and the Suez should get, well, I mean, that one's tough, but it should get cured fairly quickly as well. And the Panama one, it sounded like we're going to have a little better water flows through there, so it's not going to be open to grain traffic for a while, but it should be after a bit. But so corn, I mean, it's important today, and it's getting some pressure from soybeans as well. So, but going forward, I mean, we got to start paying attention to that safrinha crop at some time. I don't know how long the computers probably have to wait till we get a month into that growing season before we really, really care.
If you look at a chart, we have been very sideways though in corn, haven't we?
We have. We've seen good buying on the lows, and we've seen good, we've seen a cap at the highs on this stuff. We've seen a cap on a lot of markets. And the question is, are we going to have that demand to pop us right now? Is China going to come in and kick us off the lows in corn, or are we going to slowly grind down and make new lows? I wouldn't be surprised to see new lows in this thing, even though I've got a bullish bias longer term. It's kind of the same thing wheat did. It had no reason to go down as low as it did, but it did. And then that's when the end user stepped in and kicked us up where we are. And I think the same thing's happening in corn.
Now, wheat was up by itself on Tuesday. Was that just short covering, or is there some talk of China business again rumbling under the surface?
Well, we've had China rumblings every week, and the only week they really showed up on our export data was the big week where they bought the 40 million bushels of soft red. They haven't been that active otherwise, so it's kind of disappointing. I keep hearing the rumors, but I'm not seeing it on the sales in white wheat or soft white or hard red spring or in hard red winter. So to me, today was short covering. We're not seeing the open interest increase as this rally goes up. We are seeing the spreads narrow. We're seeing, I think the hedge funds want out of that market. Like I say, major export demand. Pretty much all the bigs are buying right now in big quantities. So the hedge funds have no reason to be short down here. So I'm hoping they continue to get out of this market. So,
yeah. How much of their record short have they covered, Kevin?
From what I'm watching, about 35%, 38%. So, they've got another 70 contracts to go. So, that's still another full-size soft red wheat crop that they have to buy back. And, the higher we go, the more bullish people will get. And as people start to get more bullish, they'll be less apt to sell, and that'll, you'll get more mileage on the second half of their short position than you did the first half, which is backwards, but that's how it works. So, we'll see. We could have a pretty good move here after the first of the year.
Yeah. So how much of a move do you think that is going to produce if they do blow out of those shorts in wheat?
Well, if they go completely to neutral, I mean, I would expect, I thought pretty much the minimum we'd move up would be about $1.80 for the entire move. And so if we're 35% there, if you take the low from the high that we just had, Kansas City moved almost $1. Chicago was 90 cents. And so moving another $1.20 from here would probably get us to neutral, maybe a little more than that. It'll depend a little bit on the news flow, and if China buys big, if India comes in like India's been talking with Russia, if they come in and buy 3-4 million metric tons, that's going to change the whole scope of this market. So it could get interesting pretty quickly.
Do you think cattle have kind of recovered enough for now and are just kind of waiting to see where cash and this cattle on feed report come out?
That'd be my guess. My guess is we may have another down day or two. We still haven't recovered anywhere near the 38% or 30 to 38% of the large move down, and there's a big gap up around 250 in the April. So longer term, I think we're going to head up to those, but short term, yeah, we could stall here for another day or two, and if we do, that's probably a good buy signal for people who want to. If they ended up selling product too cheap or what they think is too cheap, it'd be a good time for them to look at maybe some call options to at least buy some of that upside back. Longer term, I still like that market a lot.
I also want to get your thoughts about some of these outside markets, the move that we've had in the dollar since the Fed kind of signaled that they're going to pull back on interest rates in 24. Obviously, we've also seen a move in crude oil. And what are you expecting here ahead?
Well, I would think, with $6 trillion sitting on the sidelines in money market accounts, and if we truly are going to start cutting rates and ease into this, I would hope that some of that money moves into commodities overall, because boy, this last year's been difficult. There's been some kind of a stopper just about on every commodity market out there, and you've got the Suez Canal problems and a lot of war threats, and yet crude oil's up $1 today. It should probably be up 10, and so it's I would say the odds favor some friendliness towards commodities as we go into this next year. And with the dollar, hopefully it's going to continue to back off. I'm encouraged by that. I'm encouraged by gold and silver continuing to move higher. We'll just see if we can get what happens with that money in the sidelines. And right now, if they're still making 5%, they're probably going to stay there. If it starts backing off, then you'll start seeing them looking for a new home. So
when we look at outside markets and money flow, the stock market hitting some new highs. And so is there some money that's going to go over there in the short term before it maybe decides to come back into commodities?
That's certainly a possibility. I look at my financial indicators that I look at are much simpler, like trucking and backhauls and a lot of stuff. And none of the stuff I see suggests that the economy is doing that great. And so I question if they want to put their money in the stocks or up at new highs. It seems risky to me, but maybe there might be an initial push there for sure. So push, 3-4% or something like that. But after that, I'd be really cautious that market.
Yeah, it's all intertwined though, that's for sure. All right, thanks for joining us, Kevin Duling, KD Investors. That is Markets Now.